Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs and certainly qualify for that potential very generous up to 25% bonus offer for all new trading accounts. Alternatively, you can visit the website www.cfds.com or cfds.education to certainly learn more with my charts and analysis and obviously video updates that I'm doing at present. Okay, folks, let's try and decipher exactly what's happening here in terms of a risk flow. Now, the Asian markets certainly have sprung a surprise. Now, I did a video yesterday with regards to European markets, expecting a potential downturn first, and then obviously a rally going into Mr. Draghi. That certainly seems to be front run to a large extent. As you can see with the Asian markets, certainly mixed in the sense that you've got the Hang Seng up quite substantially. The Nikkei, a whopping 1,000 point rally, very, very impressive. Regain that 16,000 level. I mean, that's very, very impressive to say the least. Okay, so a 7% rally overnight. Now, that's on the back of weaker GDP numbers as well and industrial production numbers. So, now the article or the articles that I'm reading right now with potential to more QE. I mean, the article that I can read on Market Watch here, I mean, it's just an example. FTSE jumps as investors eye Japanese stimulus prospects. So basically, the weaker GDP number has been interpreted as more QE. I mean, together with a recent slump in the Nikkei and the appreciation of the yen, the case for additional Bank of Japan easing remains compelling. If that was the case, why did they do negative interest rates? I don't think that remains compelling at all. It's more of a short squeeze bounce from my perspective. Now, bear market rallies can be quite sharp, can be quite vicious. In terms of the Nikkei, you can see we've certainly bounced. So we're back at that 16,000 level. So previous support equals resistance of the Nikkei, and therefore you are now looking at potential resistance on global markets. So my interpretation of events. Okay. Now, in terms of economic news flow from China, we had weaker imports. Imports down a massive 14.4%. Expected was -7, so almost double the expectations on the downside. So that's certainly negative. Okay, exports down -6.6%. Previously it was 1.4. So to a large extent, one can argue that yes, the actual bearish data certainly has been factored in with the Shanghai. Now, the Shanghai certainly did close negative for the day, as you can see here. We did bounce off the low. We did put a potential bottoming tail in, but we certainly are weaker on the day. Now, that 200 MA certainly seems to be in its zone or in the target zone, and that certainly will be a level that you are potentially going to hit for the Shanghai. Now, given the fact that you have weaker imports, -14.4%, who is the loser? The loser is European markets. US markets, okay, emerging markets. Why? Because if the health of the Chinese consumer is weak, as you can see, with a drop of 14.4% on the imports measure just for January alone, even though retail sales over the New Year certainly were better than expected, this is certainly interpreted as being bearish from my perspective. Adding the fact that you've got GDP and industrial production data out of Japan certainly weaker as well. Again, that adds to the global growth slowdown story, okay? And that exacerbates the problems, okay? And that certainly does trigger off another round or bout of risk aversion from my perspective. Also, I did explain yesterday that we had a potential topping tail on the renminbi or the yuan. So again, although it has fallen further today and the dollar has strengthened, given the retail sales measure was certainly better than expected. So again, certainly something to consider. Now, the USD JPY, looking at it from a 4-hour chart perspective, we certainly have bounced quite substantially. We are now coming into resistance, folks. Previous support equals resistance. You can see that better on the 60-minute chart. As you can see, we're holding that key zone at 114.2. We are remaining below that 114 level. So again, certainly a potential risk-off zone. So certainly keep an eye on that 114.2 level. If we remain below there, bias still remains bearish, and the bears are certainly in control of this market. Okay, it's a good risk barometer, so certainly keep an eye on that. Although we do have Mr. Draghi speaking today, that's one of the reasons why this market may well be front running his potential speech. and short squeezing higher quite viciously. Now the euro has dropped, but not as substantially as the equities are explaining, or equities are moving. Now it certainly hasn't dropped as much as it in proportion to the European equities. Now you can see here we're holding that pivot low support at 1.1.9. 200 MA is obviously into support now. We're not making any new lower lows as of yet. And if Mr. Draghi was going to be dovish, or the expectations are to be dovish, it certainly isn't showing in the Euro USD chart, even with stronger retail sales from the US. Again, we have concerns with regards to Greece still ongoing as well, with regards to its potential bailout and rescue. Also we have geopolitical tensions as well, with Saudi and Turkey potentially invading Syria, and obviously rhetoric from Russia. So that again is a cause for concern. So this is something certainly to consider. Now we have had the news with regards to Italian banks being bought as part of the QE strategy. I'm not sure whether or not that's gaining traction, and whether or not it's been confirmed as of yet. It's still a theory that's been thrown out there, and it was thrown out there last week as well to a large extent. Okay, so from my perspective, given the fact that the Shanghai is negative, given the fact that we have weaker imports out of China, weaker GDP, again, that's all going to weigh. Having said that, though, Mr. Draghi is speaking, and that could certainly spook the shorts to a large extent as well. If he obviously utters any dovish rhetoric, that could certainly add wood to the fire and trigger the short squeeze even further. But again, it's the market will dictate, the price action needs to be followed. So let's look at the actual price action now. Let's see exactly where we stand. Now the Euro Stoxx is into that previous support equals resistance zone, so you are looking at 2850. Now I did explain that we were going to get a pullback, and then obviously we'll go into that zone with Draghi's speech, but it's the other way around. We certainly have pushed higher, given the fact that the Nikkei has certainly rallied sharply, almost 7% higher overnight. The 60-minute chart of the Euro Stoxx, as you can see here, you are now potentially into resistance at that 2850 zone, and that will be the zone to potentially short. Okay, again, it all depends on Mr. Draghi, what he has to say, and that will dictate the market bias. We failed to hold that resistance zone at 2820. I didn't expect that to hold in the morning, and I actually got stopped out of my shorts, minus 30. A very, very impressive rally. Now, for now, we are obviously holding that intraday resistance and looking at 2850 as the key resistance zone on larger time frames as well. Unfilled gap remains below at 2760, so that certainly needs to be watched out for. And also we have that unfilled gap at 2680. They are the two zones to potentially observe. Now taking the pivot low here, if I just connect the pivot low, this is also a trend line, and that 2760 zone certainly seems to be key. Okay, right. In terms of the German DAX, let's bring up the German DAX. Let's see exactly where we stand here. Looking at a daily chart, German DAX, you are now coming into resistance. Previous support equals resistance, folks, on that 9330 level. So certainly take that's a very important level to watch and keep an eye on for the remainder of the day. If we do continue to short squeeze higher, obviously on Draghi's speech. For now, resistance, as we know, is at 9275 and 9320. Okay, you are holding that previous support equals resistance at above 9125, and we'll see exactly how this market reacts. But bear in mind, folks, you do have that unfilled gap now. Okay, so below, and that gap is going to be very, very important as to the next direction of this market. Unfilled gaps below certainly are not healthy. Okay, and certainly vulnerable to being closed. So certainly bear that in mind. The rally that we are witnessing is not being confirmed on the Euro USD, which is a concern. I did expect the Euro USD to potentially be down over more than 100 pips at least, and it certainly hasn't occurred. Okay, right. 10-minute chart, in terms of support on the downside, 9120 will be your first support zone. If that fails, then you do have support at this zone here, which is 9020. Okay, if that fails, then the ultimate support zone will be gap fill at 9700 and 998960. Bear in mind, this market is very fickle, and don't be surprised if that gap closes very, very quickly. Okay, in terms of the French CAC now, let's bring up the CAC and see exactly where that stands. The daily chart of the French CAC, let's just certainly observe this. We now are into that fib 38 to 50% resistance. I am actually short the CAC from 4122 or 4121 and looking for potential downside movement. Looking at the 60-minute chart of the French CAC, you do have resistance here at the 4115 zone, and hence the reason why I'm short. If you fail to hold this level, then the next zone to potentially look at is the 4180 zone, which is previous support equals resistance, and then you have the 200 MA to play with as well. Okay, so we shall see how this interacts. 10-minute chart, certainly from my perspective, is oversold, given the horizontal resistance in this region at 4116. We certainly seem to be consolidating for now. Whether we can continue to move higher going into Draghi again, that will be well, certainly find out. But from my perspective, I think the market certainly has rallied all the certainly has factored in all the bullish news for now. Okay, now let's have a look at the FTSE 100. Certainly another stellar rally in the FTSE. Led by HSBC remaining in the UK. That certainly has helped the banking sector to a large extent. We are now into that resistance zone though, folks, so bear that in mind. FIB 50% resistance is at 5810. We're currently at 5820. You have the FIB 61 at 5880. So this is quite an important zone that we're in. Previous support equals resistance in this zone too. 60-minute chart on the FTSE 100. You're into that 200 MA. Previous support equals resistance. Quite an important zone for the FTSE 100 to stall and potentially reverse. 10-minute chart, again, intraday highs at the moment are at 5825, 5824 region, and looking at that level to potentially hold and reverse. I am actually short the FTSE at this region and looking for further downside, especially given the fact that the oil price, if I bring the chart of oil, you are looking at resistance on oil now, where you're into that 200 MA. This is a zone which will be very, very important to watch. Looking at the 4-hour chart of the oil price, you can see this key diagonal trend line. We are into that zone. I didn't expect this resistance zone here to play out, but given the ongoing uncertainty in Syria, especially with Saudi Arabia and Iran now, and obviously Russia and Turkey in that dangerous game, and obviously the US as well, it's all war by proxy. So it's that Cold War part 2, and again, that will help the oil price to a large extent. Although having said that, Chinese data, GDP data will certainly force it lower. So bear that in mind. Any rally on geopolitics on oil is generally considered to be negative for the actual market. So certainly take that into consideration as well. Okay. Now in terms of the Euro USD, let's just bring that chart for you as well. Going into Draghi, it will be quite important. The daily chart itself is looking quite top heavy. We certainly are looking to potentially pull back. Although the 60-minute chart is certainly indicating potential support in this zone. So we've certainly rallied, well, certainly fallen back almost, about 1.1380 was a pivot high. We're now at the 1.12 handle, so down 180 pips from that pivot high. But given the price action in equities, you'd certainly consider to just be much more substantially lower. So again, one of them is Pinocchio. Either it's equities or it's the euro, and that certainly remains a concern from my perspective. Okay. In terms of the actual sectors, let's just quickly look at the banking sector, because as we all know, the banking sector certainly has been the main driver of this market at this current juncture. So the 60-minute chart of the banking sector, from my perspective, is certainly into resistance, and we are now at previous support equals resistance on the FTSE 100 banking sector. Let's have a look. European financials again are stalling. You can see a 10-minute chart failing to make higher highs. It certainly is holding that resistance zone. And again, on the 60-minute chart, you're in that previous support equals resistance zone on the banking or financial sector in Europe. So again, if financials are dictating price action, which they have been the last week or so, then you are now into potential resistance, and you are looking to see weakness in the European markets from my perspective. Okay, so certainly you keep an eye on European banks for the potential next move in this marketplace. Okay, so we shall certainly see. In terms of the Aussie itself certainly still remains weak. We have had a pivot low at 4138. We had the H&S formation, but the 60 and 4-hour charts certainly remain bearish on the Aussie and the Kiwi to a large extent. As you can see, the H&S formation on the 4-hour chart, the daily chart has a bear flag formation. Looking at the potential Kiwi as well, again, we are holding that resistance zone at the pivot high of 0.6675. Going to a 4-hour chart, again, we've held resistance at 0.6740. And on the daily chart, you are holding that 200 MA resistance, and that bearish engulfing candle certainly remains in their total control. Okay, so these are the factors that we are going to look at. From my perspective, Aussie, Kiwi into resistance, oil into resistance. Copper certainly has fallen and held that resistance at the 209 zone and indicating weakness. Also the S&P 500 currently trading at the 1890 zone. Okay, 1890 zone. Now you do have 200 MA as potential resistance on the 60-minute chart, and we certainly seem to be certainly from my perspective, certainly overbought. You could have a pivot high of 1900 and hit the 200 MA. That is certainly a potential. But you had solid resistance in this 1875 and 1876 zone. We certainly have surpassed that to a large extent in the interim. So it shall be very interesting to see where the S&P certainly trades. Now, you do have an unfilled gap at 1904 and obviously 1915, so that certainly is a zone.